Hello, divine beings of the universe. This is the review of yesterday's trading session. It's the 30th, I think. Probably it's the 30th of July 2025. I wanted to take a look at yesterday's trading. I know I did an after action review, but I wanted to go over with it with a pencil and with my little pointer and just try out the Apple Pencil and see what we can learn from today. I made a little bit. I made some changes to the way I put in the overall boxes. It kind of looks more professional and more sleek, I think. And then I added a self-coaching box, which I think is gonna help me understand why I did the things I did in the heat of the moment. So at these reviews, it's going to be a little bit more clear of why maybe some things were executed and why not. So let's just look at overall. If we go to the self-coaching, we picked UNH, which is the symbol. Why? Well, because it fired on our sniper target. And why did we select it out of our prepared list? And it was because there was an abnormal gap down. So the close was somewhere around here, it gapped down to here. So now we have a target that's definitely tradable. And let's see how we did. So overall, this is the first point of interest for us. I'm going to try to get better at drawing with the colors. So this, what is this? Well, this is an OR3. So OR3 means an opening range 3. That means we could take a breakout of right over here. This is an advanced technique that we're not using at the moment. So it's just in general. But what we are using is what I call, or what we call, the 1, 2, 3, like this. The 1, 2, 3 entry, which means that I need to have a bar with a low. Then the second bar closes, just opens here in the middle of this bar, makes a higher high, and makes a higher low. And then the third bar opens here and breaks above the second bar over here. So we have a 1, 2, and 3. So that's a 1, 2, 3 entry. Now the 1, 2, 3 entry, as we can see, happens here, where we have the first bar. The low of the day is somewhere around under here. We have the first bar, which is right over here. The second bar opens in the body, closes higher, and then we have the entry right over here. It looks like, with this is our standard risk box, it looks like we have like about a 1 or a 1.5 bar to the top, and it looks like we got out here out of fear or whatever, but that's not the case. What actually happened was when this bar opened, it went up, it went to about 0.7 R, and then it started to reverse back, hit my stop, then reversed a little bit up, then down, then up, and then closed here. So actually there was a lot of oscillation in this bar over here. It's not that it just opened here, bought back up and just closed here. If that would be the case, then I would definitely capture more than 0.15 R. But unfortunately, in these opening moments, in these opening minutes, these bars oscillate a lot. So even though it looks like, for example, this bar looks like open, closes, and like it just runs all the way down. That's not how it goes. In the 3 minutes, it usually oscillates up and down, and then just closes here. So this first trade, I remember I have to go watch the game film because I record myself trading. So I have to, but I think I was a little bit hesitant with this entry. I think I messed up the trade frame. Overall, the entry was good with the correct risk box. I just was panicking because I think I don't know. It wasn't perfectly set, and I didn't have my kind of trade frame that I always put on the long side, so I know exactly at what points I'm supposed to move my stop. So even though I took 0 plus 15 R, 0 plus 0.15 R, I think there was maybe about half an hour available here with better execution. So I think that was an improvement that can be made on my part. So that's that. That's the first. Just gonna delete this. Cool. So that's the first entry and our first trade. The second trade happens a little bit longer. As we can see, price is now coming towards the VWAP. It breaks under, it rejects the RL10 reverses. And now we could be thinking about an entry somewhere around here. The reason why we can be thinking about an entry is, let's say that we were short from here somehow. And we would have been taking the skin of the dragon exit, which would be right over here. Somewhere around here is a pretty good entry to think, hey, this thing had a chance to fail all the way down, right? Maybe I can draw it a little bit better. There we go. So this thing had a chance to fail down. It didn't, and now it reverses. Well, we want to get long as soon as possible, ASAP. So if this move continues up, we can be there with a very small manageable risk box from the low of the day. So let's say this was the low of the day, somewhere around here. Then we would say, hey, there's a range stat move available for sure. And we want to, be able to capture that move. The interesting thing is that, yeah, so when we get in here somewhere, yeah, so we get in here on a WMB3 on a WMB3 entry, which means that on the Williams percent R, which the indicator you cannot see, and on the MACD there was an uptick on the histogram. Williams percent R was oversold given this huge gap down. So we get in here. Also, this entry is theoretically a 1, 2, and a 3 entry as well. So there's two ideas here. Also, you could see this as the RLXD crossing the dragon, or the RL10 crossing the dragon. So there's definitely more reasons to get in here, which we do. And the same thing happens. We get in here, the bar goes up, then starts to sell off. So at the point where we got to about a plus 0.7 R win, we move to no lose plus dinner for 2, and it takes us out. And then it closes here. Awesome, no problem. While this was happening, I had my buy stop moving around here, because when this bar closes here, this is the range stat from the low of the day, and as you can see, we already have moved above range stat move. So if for example I think this is the bar that made the range stat move, or made it to say that it has moved more than a range stat, about 109% if I remember correctly. So that means that we can now start thinking about the move up to about 2 range stat moves, because normally we have a maximum reasonable intraday move is 1 range stat. But if it goes beyond that, then we're in abnormal territory, and we could expect maybe even a 2 times range stat move. So I'm going to delete all of this quickly. So given this hypothesis, when price here violates the 1 range stat move, then I'm inclined to believe that this move could go all the way up, even to the top of the dragon there, where it closed yesterday. If this price did not violate the range stat move, then I don't think I can even take these trades, because I don't think I see a 2-to-1 to the top of the range stat. So this was the reason why I believe I took the range stat move, or took these trades correctly. So that's the WMB3. This is the SSC. That means we have a buy stop here from here that we move always from the PSAR down. So while I was in this trade right over here, I was already thinking about, if I get out here, and I did, how can I get back in and I can get back on the SSC. Now, the SSC pattern has a couple more ideas around entries. The very conservative entries around here, because if we can go down, then you see when the PSAR flips, that's this bar, and we would take the breakout of that bar, so we would get in here. But the more aggressive entry is just to take a buy stop and start moving it down on the PSAR. When the PSAR breaks, like as it does right over here, as you can see, then we get our entry. Same thing happens. Here, it actually saves us an R, as we can see when it makes the 0.7 R move, we move to no lose plus dinner for 2. We get paid about 0.16, and then it fails, and it would have failed under our risk box, so we would have taken a 1R hit, which is fine. So it makes the new high of the day, starts to reverse, makes this kind of pullback, and then falls down. At this point, this was my mistake. I shouldn't have these boxes here because it blocks the PSAR. But right over here, the PSAR flips. So, I mean, right over here, I'm sorry. On this bar, the PSAR flips. So, from my point of view, I see a high, a low, a lower high. So I'm thinking, hey, that's a negative bias. So I get short here, and I can expect price to go to the low of the day, maybe to the RL10, to the bottom of the dragon. Those are some kind of price targets that I can think. So I have about 1R, I think, 1R to the bottom of the dragon. I have maybe another 1.5 to the bottom of the RL10, and then it's Armageddon because there's no support for it all the way to the low of the day. So I think that was a really, really good idea and a good trade frame for sure. Also, what is important is that price crashes through the VWAP, so I'm definitely going to have a negative bias. So I really like this short. The second I put my sell order right over here. It gets like ticked in and then it immediately reverses. So I take a minus 1R loss. But what actually does happen was that this pattern, as we can see, kind of gives me this pattern. And if I draw it right over here, this is a collapsing dragon wiggle. So first we had the Kata 2, that didn't work. And then I said to myself, hey, maybe this collapsing dragon wiggle, it's a legitimate pattern, and maybe this can work. Maybe the first one doesn't work. We can try again. So let me just get rid of all of this drawing. So I do that. I get in. Again, I get filled, and then a couple bars later, it just takes me out. I think I could have gotten out here. Again, it's supposed to go immediately, and it doesn't. So I should be getting out probably at the spine of the dragon, maybe price going through the Bollinger Band mean. So I think here it shouldn't be minus 1.2R. It could be about half an R there. Now price goes back up and reverses. And at this point right over here, I was talking to myself, and I remembered the story of Bill when Ken was talking about that he had 10 losses in a row. So I mentally was like, well, the first Kata 2 didn't work. The collapsing dragon wiggle didn't work. And then I was like, well, you know what? Here's a high, a low, a lower high. I'm just going to go for it and try one more time. And this time it does pay off. So we have a collapsing dragon to the downside. It starts working. Then this bar, unfortunately, since this was already a 0.7 move, we move to no lose plus dinner for 2. It takes us out, then no lose plus dinner for 2, and then falls down. So if we would have been in the trade, it would have been about 0.5 or 0.6 R win, but that's fine. It reverses, it kind of stalls, and then here it's not very easy to see, but this is actually another collapsing dragon wiggle. So I kind of have the negative bias because I'm below the VWAP, so I want to take this short. And so I get in. It kind of hesitates, doesn't do anything. And then while it's happening, I'm thinking about, okay, well, if this doesn't want to go down, maybe it wants to go up. So I actually have a buy signal on the SSC because this whole move from the top of the high of the day to this point was about 60% of a range stat. So I think that's definitely an ambiguous move to the downside. So I'm thinking, okay, awesome. So this is definitely has some merits for an SSC to the top. And so actually what I do is I cancel the stop loss and just put in a buy order of double the position. So if so when price would violate this zone, I would pay since I would have double the position. One position would cover the short position, and the second one would be long standard risk on the SSC. That's exactly what happens. Unfortunately, the second I get in, it immediately just goes down and takes me out at minus 0.77 R, and I lose minus 0.58 R. And that's it for the day because I had four bullets or four bets, four betting units for that day, and at that time I had no bullets left, so I had to stop. I had to stop trading, and that was it. So overall, if I go look back at my self-coaching, I identified new entries and executed them ruthlessly given the standard work and exit rules. This was the 1, 2, 3, the WMB3, and all the things. This is SSE. It should be a Kata too short. I see that as a mistake. My bad. Um, Excuse that. So I think it was fine given the standard risk and identifying these patterns. So I think that was very good. And I was disciplined enough to stop trading after four bullets was gone. And I had a positive mindset about the process and everything. That was fine. Negative, I think the first trade, like I said, I had to go back and look at that. I could have gotten more and hesitated with my entry. Even though the entry was correct, I just felt like it wasn't where I wanted to go, where I wanted to be on par. And with the exit rules, I could have gotten more. And I think the improvements for me are just going to be this was my first real experience with very, very volatile first bars where you just get in and in 5 seconds it goes up to 1 hour and then sells off. So I think this is just going to be with experience and better buy and stop or entries, panicked at the first trade. Yeah, so that's something that I want to improve on. So that's pretty much all that I had for the coaching. If I looked at this from Ken Long's perspective, I'm just going to draw and just think about how Ken would trade it. So here OR3, he would probably be long here. If this would take him out at minus 1 R, then we would definitely get back in here somewhere. This would probably have one, two. I don't know if maybe my exit rules are a little bit too tight. Maybe he would have stayed in a little bit longer, but probably would have captured some gain here. He would probably get in here somewhere when it rejects the VWAP, either RLXD 1, 2, 3, somewhere around here. Again, I'm not really sure about the exit rules. Ken has a really good I think grasp of letting the trades work. So I think he would have gotten more of this move. When this reverses, maybe there's an idea of getting through here when price goes through the dragon. It fails to kind of go up. It doesn't even hit the Bollinger Band mean, so maybe Ken would be short here. An idea here is to also see these kind of lines as collapsing dragons. So if there's ever a violation of this, we should be definitely thinking about a short. So getting short here or here in anticipation of this is probably not a bad idea. I think this is fine. I think this entry was something Ken would take somewhere. I just think Ken would automatically just get out as soon. So when you get in and starts, it doesn't go down as you want. It just reverses at the VWAP. He would probably cut it short here as well. Definitely the collapsing dragon again probably has more patience and more understanding of the risk box, and so I think he would have gotten more of this move. Maybe since he would have stayed in this move or just would taken the skin of the dragon, exit right over here. Um, if he would have gotten in here, he probably would have cut it over here somewhere and just either taken the SSC or not. So I think the biggest difference between what I see Ken doing and what I doing is that he has the exit rules, he has the knowledge to kind of cut immediately when the trade's not working. I don't have that as an exit rule right now, and I don't have the experience yet. But the more I watch his videos and how he coaches other traders, that's kind of the theme that keeps reoccurring. So I think that's definitely something that I'm gonna have to work on. But overall, I feel I've found most of the patterns. I try to be with the trend. That means I try to be long here. I try to be long here. I try to be short here. I try to be short here. So I try to go with the trend. I just wasn't aligned too much. So definitely some improvements from me. But it's just another day at the races. I think I learned a lot, and that's the most important thing. Continuous learning and continuous improvement is what's most important for me. So thanks for watching. I'll get this published and posted, and have a great day.